And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And the sloppiness, if I may, continues. We're going to get into that as far as the broader markets. Triple witching was a real doozy today, but we did get some key economic data last week, and it's ahead of a very critical meeting next week relating to the Federal Reserve, interest rates, and inflation, all of those very impactful news items. So let's go ahead and take a look at some of the news that did drive price action last week. From there, we're going to go ahead and take a look at the broader markets. Where did we close for the week? And then beyond that, beneath those broader markets, on the lookout for some rotation that is actually beginning to shape up. And I'll go ahead and share that with you. So on the news front, we did receive two very important inflation data numbers, the core price index and the consumer price index and the producer price index, and both had core components to them, and both numbers are very closely watched by the Federal Reserve. Now, interestingly, on the surface, both reports did show that inflation is still ticking higher. However, not a whole lot in the way of a response, primarily because they were not alarming. Overall, economists are still anticipating that next week, the Federal Reserve will pause interest rates again, and then it really gets mixed relative to the outlook for the November FOMC meeting, but we'll take it one meeting at a time. Other data received last week was retail sales, and on the surface, again, it looks super strong, but similar to that consumer price index number, the retail numbers showed an uptick because of a big increase in the price of gasoline. I'm sure many of you have felt that. So from that number, we did see a little bit of a boost among some retailers, but again, not much. Now, we did also see semiconductor stocks fall quite a bit last week. I will share with you where and why. And then also, we are on the cusp, and actually it did take place today, the beginning of a strike among the United Auto Workers in Ford and GM, and that's going to have an impact on certain areas of the market, depending on how long that strike takes place. And really, that's it for what took place last week. Let's go ahead now and dig in. I want to share with you where we are with the broader markets and what we could potentially anticipate as we move through into the fourth quarter. And here we are. This is a daily price chart of the S&P 500. And this is a period, certainly over the last several weeks, where I've been able to keep these same key areas of upside resistance and possible support in place, primarily because the S&P 500 has been within 2% of this key 50-day simple moving average for 27 days in a row. So we are in this very, very tight trading range. However, there's quite a bit more in the way of broader price action movement that is much more. And I'm sure many of you may be feeling it if you are taking and participating in this market. But let's take a close look here at the S&P 500. We dipped just below this key neutral area with the RSI. So we now are in negative territory. Stochastics heading south potentially, but they are still in positive territory. And we can see that we did close below that key 50-day simple moving average. However, we were able to retain a presence above this key 10-day simple moving average. And again, very, very tight by way of the trading range. And I've noted here the areas of possible support and resistance if we begin to see more elevated price action, more volatility, and certainly we will keep an eye out for that. From here, let's go ahead and take a look at the Nasdaq. It did fare a bit worse than the S&P 500. However, both indices were down very nominally for the week. So here we are with that tech-heavy growth-laden Nasdaq, and we can see similar price action closing below this red 50-day simple moving average. And on that 21-day simple moving average, we are just below it. We closed just below that key area, but again, very tight back and forth trading range. The RSI is now back in negative territory below that net neutral. And today, the stochastics did now enter into negative territory. So we are seeing a bit more weakness in this tech-heavy Nasdaq, but overall, very, very similar price action in those two broader market indices. We will get into small caps and the Dow as we move forward. But from here, let's take a look within the S&P 500 at those 11 underlying sectors. And what I am doing here is sharing a 2-month daily price chart view. I've added a relative strength indicator and then sorted the list by that RSI. We want to be aware of where the current relative outperformance is taking shape, as well as weakness. And as always, on the lookout for rotation. Are there groups moving up from this forefront down to the weaker areas, or more constructively entering into this middle area from the weaker areas? So first up here is energy. It has been up here at the forefront for quite some time. I'll share with you a view of the price of Brent crude oil, which continues to rise. But interestingly, the energy sector, despite an uptick in the price of oil, was flat this week. It was up 0.2%. And you can see this pullback to that 10-day simple moving average, still in a very confirmed uptrend, however. And then as we move through, on the lookout for groups that, as I suggested, are moving from these weaker areas up to the forefront. Utilities would be one of them. It did begin last week to develop as far as this sharp uptick that was continued into this week. It was the top performing sector, up 3%. Now, it's not quite in an attractive area yet. There are 111 utility stocks that are publicly traded. I did run a screen for names that are above key moving averages, and it's a very, very short list. So not quite ready for prime time, but certainly up here within the stronger groups relative to other names. Financials also up here at the forefront. This is XLF. This is an area that I'm going to get into more as we move forward, sharing with you where the outperformance is and why, and areas and names that you can potentially invest in by way of really hedging these higher growth names that are currently coming under selling pressure. So let's go ahead and move on and take a look at some of these weaker areas. Healthcare really been bouncing around here. Gave the impression into yesterday that it was going to regain its uptrend. Yet again, we've seen third failed downtrend reversal attempt, and we can see the momentum is in negative territory. Lots of dynamics taking place within healthcare. Those of you that are subscribers to my MEM Edge report, I've spoken of it relative to Biden's initiative to reduce costs. I won't get into it here, but certainly there is a lot by way of dynamics taking place among and within those healthcare names. Let's take a look at technology, which has now really digressed and moved down into that lower quartile. This is XLK, and you can see that it is now down below each of its key moving averages. It was down 2.3% this week, and that is relative to the Nasdaq that was down 0.4%. I will share with you why the Nasdaq was able to outperform despite such a poor performance from technology. You'll want to certainly stay tuned for that. And also taking a look at some of these other groups, consumer discretionary. I would argue that this is not a true picture because the group was up 1.7% this week. On the surface, appears to be in a very nice confirmed uptrend. However, I'll share with you as we move forward two key names that really kept that industry group or sector in positive territory. So from here, let's go ahead and move a bit further. We want to dive beneath those sectors, take a look at some of these industry group ETFs that I find super useful in, again, staying on top of where price movement is performing in a positive manner versus weakness. So again, a 2-month daily price chart view. And here we are, Brent crude up here at the forefront, $94 per barrel. Now, you are going to take into account, of course, the price of oil when you're examining and looking at energy stocks, but there are other dynamics that need to be taken into account. Europe announced that they may be increasing their interest rates, and that in turn could reduce the desire or the need for oil. And China, of course, is a big piece of that puzzle as well. But certainly we are continuing to see the price of oil tick higher. Let's take a look at the yield on that 10-year treasury. And as interest rates rise, you will generally see the stock market decline. And by and large, growth stocks are going to be the most negatively impacted. This is the yield on that 10-year treasury, and we ended it at about 4.3%, still elevated above that 4% level. And we've seen in the past, if we can get those interest rates lower, we will see more robustness within the broader markets. However, I will share with you some areas that gain when interest rates are rising, and actually energy stocks is one of those areas. So let's go ahead and move forward. Take a look at the Dow Jones Industrial Average here. It was up in line, actually a 0.2% for the week, just clinging above this 21-day simple moving average. But again, similar price action, tight trading range, waffling on that RSI, but very flat momentum here with that MACD trending sideways. From here, we can take a look at some of these areas that really were weak this week. And first up is IGV. And those that watch this show every week will know that this is the tech software ETF. And it had been in a very nice confirmed uptrend, really helping support that technology sector. However, it did get hit this week. And here we are, it was down about 3.5% for the week. The momentum here shifting into negative territory, MACD black line down through the red, all about earnings. Oracle came out and their numbers were not particularly strong. We'll take a look at that chart as we move through, but it really did have an impact on other software names. Adobe actually came out with good numbers, but pulled back this week. So two well-known names that suffered in the light of earnings. So here we are with KRE. Now, this chart does not show that the overall group was up almost 1%. Not quite ready here. We want to be on the lookout for, again, with my MEM Edge report, we were able to get into a couple of names on this downtrend reversal that took shape from July into August and then removed them as weakness began to prevail. And here we are with another potential uptrend, but not a whole lot by way of momentum there. We'll take a look at some other names in that industry that are a bit larger. But let's take a look. This is XRT, that retail ETF. I talked to you about the consumer discretionary group, and we can see XRT was really flat for the week. So not a lot of help from retail, despite retail sales coming in strong, although we did review why they came in strongly. And here we are with semiconductors, and they are now progressing down into further that lower quartile, representing weakness, down 3% today. There's one particular sub-industry group that got hit really hard today, all about news from Taiwan Semi as it relates to their delaying the delivery of orders due to light chip demand. So I will tell you, semiconductor equipment stocks got walloped today. And in essence, we can see that the overall weakness is continuing among those semiconductors. Another area that I did want to share with you by way of this continued weakness is IHI. And I've always circle back to this because if we pull up a weekly, I'll share with you this concept that in past years, when this group gets going, it is the growth portion of healthcare. It can really provide some nice returns, but we're continuing to see weakness. And again, it's because of what I alluded to earlier as it relates to healthcare. It's not only going to impact drugs, but also these medical devices that are needed, but the funding may not be there for that group. Now, from here, I have a lot of different directions we can go in, but I'm going to start by sharing with you a view on StockCharts.com that I absolutely go to every day. So it is the S&P 500. And quite simply, it is the names that are up the most. So when the market opens, for instance, you can see the names that are under getting bought. And I'll share with you a name that was up quite a bit this week, and it hit the screen early this week. Here we are with Tesla. The stock was up 10%. This is one of the reasons that consumer discretionary group fared quite well. But let's take a look at an intraday chart. And here we are earlier this week, and the type of thing that can take shape if you are actively watching the markets on the open. You would have seen here on the 11th, this gap up that took place in Tesla. And this is an intraday 15-minute chart. It's not a normal go-to chart for me, but when I see a name have this big gap up, heavy volume, of course, you will want to read and take a look at the news. Is it a sustainable move? Take a look at the chart. And in fact, I did get into Tesla on that gap up, and it did have a nice continuation rally subsequent to that. So that is one way to use this list. But let's go ahead back, because there is another item that this market movers chart list shows you. And I'm going to pull up a candle glance view. Among them, not so much today, but oftentimes you will see thematic moves where there are moves into a particular group. And we see a little bit of that today with Southwest Airlines and JBHT, two transportation names. But also, quite simply, what we are seeing in today's gainers is these very down and out names attempting to potentially reverse their downtrend. So from here, I'm just going to highlight two of the names that look a little more interesting than the others by way of this daily price chart. So first up here is Capital One, COF, consumer lender, and we can see this significant move up above each of these moving averages. And upon that, we now have this MACD crossover black line up through the red, nice high volume on today's rally, and that RSI dipping into positive territory. Now, from here, you will want to uncover what precisely that news was, and also take into account that you do still need to overcome this 50-day simple moving average as a way of reversing its downtrend. And we can go back, use historical precedents in May for a more dynamic downtrend reversal. And then once we get up above these moving averages, it is more likely that the advance will continue. Compare that to this other downtrend reversal attempt at the end of March, and you'll see that it ran into resistance at this downward trending. It did not even make it up that far. So still early, but one potentially for the watch list. And then moving back, another name that looks compelling or somewhat interesting is JB Hunt, JBH. And again, using history as your guide with the name, you will also want to take a look at the dynamics in the overall group. You want that group to also be exhibiting strength. Here we are with the move above all of these moving averages, getting above or in front of those speed bumps, and then progressing higher. So we've seen a 3-day rally in JBHT that in turn has pushed these momentum indicators into positive territory. And we now have that black line up through the red on that MACD and super high volume. So this is another way that you can use that list to uncover names that are potentially turning or moving into a more bullish position from which to potentially trade higher. And from here, I do want to share with you, I talked about that concept that when interest rates are on the rise, there are specific areas, this is that yield on that 10-year, that are going to fare well. And by that, I will segue into some of these life insurance names. Now, life insurance stocks our companies, there are a number of reasons or that they are driven higher. But as it relates to, this is Metlife, MET, we're looking at a daily price chart. And a lot of these companies, when they do receive payment for your insurance, for instance, they will invest a lot of that money into bonds so that when the interest rates are rising, they are able to put money to work at a higher level. So MET, here we are with a gap up into a base breakout. We already had that positive momentum with that RSI. We can see that MACD black line up through the red. The company provides a 3.2% yield. And for those that are looking again as a possible way to hedge against the continued volatility in some of these growth names, this might be a way to go. Another life insurance company, and another reason that they're faring a bit better here is that US COVID deaths are continuing to decline, which is good news. Third reason is the fact that these companies have gotten very, very sophisticated in their ability to assess risk. In other words, if you are provided with a life insurance policy, they've done the math, and you are deemed someone that will potentially live longer. But the bigger point there is that they've gotten quite a bit better at assessing that risk by way of using different metrics and technology. So here we are with AFL, Aflac, the duck. We all know the company. But what I did want to point out to you here is this black line up through the red, downtrend reversal, possible attempt. Now, let's take a look at this big volume today. It is a red bar. You would think that that was bad news. But what I do want to point out to you here is that we're close to a $78 base breakout. I'm going to go ahead over back to that intraday chart and share with you on this 15-minute. Actually, it is not confirming what I thought, and that was that we originally, somewhat it does, we originally had a pretty big gap down on the open, and then buyers came in on that weakness, which is generally positive news. So we did close above this low here, but not quite as dramatic as I had been hoping. But in the end, the chart looks quite constructive. A couple of other life insurance names, and I'll also share with you the fact, for instance, with Prudential, PRU, the company also is in asset management. They have many other divisions that are driving growth, but certainly they are within and among life insurers. And we can see that the stock did experience this nice base breakout and is now in an uptrend. The stock does provide a 5% yield. So that is certainly quite constructive. One last item I'll do here is go ahead and add a 5-day simple moving average. Once these stocks get into an uptrend, that's going to be this blue line. Pullbacks to that 5-day tend to be ideal buy points. Last up here, AIG, and we can see this is another stock on this daily view that is in the throes of potentially breaking out of a base, with that MACD just now getting into positive territory. Also of note, we can go back historically with AIG, and you'll see it'll have lengthy periods where that MACD seemingly is in a go nowhere environment. However, the stock continues to trend higher. Another area within insurance is property insurance, with all the new home building, and certainly by way of more homes that need to be insured. This is Chubb. CB is the ticker symbol. Certainly it has had quite a run already, maybe on a pullback of sorts, a nice 1.6% yielder. And then MKL is Markel M. This, despite being in the different part of insurance, they also benefit if rates go higher and they put new money to work there. Here we are with the stock having a nice base breakout, but most compelling here is that downtrend reversal in the MACD, indicating a new uptrend. Now, while we're on the subject of XLF and financials, I did want to point out to you some names that are faring well. And actually, let me begin. I'm not quite sure how to present here, but there was a very big IPO that came out this week, and it was very Not such a great chart, but what I did want to share with you is that the here we are, better view, ARM Holdings, huge IPO, and take a look. It went from a 55 on the open up to 66, very well received, and a pullback today. But the point here is that the positive movement in the IPO of such a large nature was viewed constructively as it relates to companies that have capital markets and departments that will bring companies public. It has really made the IPO market just a bit more enticing and vibrant. So first up here, investment banker Jefferies, JEF. Again, it's already a bit out of the gate. However, we can see this nice uptrend taking shape here in the momentum. And I would say this is more of a stock that had a base breakout last week and is seeing a nice continuation rally. The company has been really expanding into other areas, India, investment banking there and elsewhere. Definitely stretched. Look for a pullback for any possible entry. But let's take a look at some of these other larger Wall Street firms. Here's Goldman Sachs, GS, and I'll go ahead and mark this stock up. They're not due to report for another 35 plus days, but technically we can take a look at Goldman, this nice double bottom formation where the stock hits a low, rallies, pulls back again. So we have that nice higher low, and the stock breaks above that 50-day with positive momentum. Now, one other name that we can take a look at that is a larger name by way of having a vibrant market that does do these IPOs and other capital market activity. This is JPMorgan, not quite ready yet. We will want to see that move back above that 50-day, but we did get that MACD crossover, definitely one for the watch list. Last up is Morgan Stanley, MS, double bottom formation. This one did break above this key 50-day, and we can see that that MACD is now up there in positive territory. And one other area that I did want to share with you, because we did see a lot by way of pullbacks this week, despite the broader markets appearing to trade flat. So for your watch list, I would keep some of these names that had really nice earnings pulled back and have a history of recovering. This is ELF Beauty, ELF, and we can see that it pulled back, dipped below that 50-day, and buyers came in, but it's not the best of looking charts. Another name that's been on a real tear of late, and this is Eli Lilly. This is that gap up early last month into an uptrend, everything to do with their new Ozempic related drug and other factors. And we can see it hit a high here. Let's go ahead and pull up a monthly, and you will see that it did hit an all-time high. I've been on the lookout for a pullback, and we may see more deterioration. Today's 2.7% decline was on big volume. We had that MACD crossover, but keep this on your watch list. It has shown its leadership qualities, and should we see a bit more of a pullback, it could be quite interesting. And that's it for this week. Everyone, I hope you have a fantastic weekend. I'm going to look for you again here next Friday.